Good morning, traders. Greg here from Master Trader. Starting off with a very quiet morning here. You can see the current bar here on the S&P futures trading inside of yesterday's range. Really tiny so far. The day is early, of course. They've been going nowhere for a few days now, consolidating up here at resistance. As you can see on the intraday chart, they are just chopping around here, just going sideways, trying to decide which way they're going to go. As we'll see in a day or two, maybe waiting for, the markets are waiting for Apple after the close, then Facebook, and then, Fed announcement Wednesday. So all those things you want to keep in mind here. However, the NASDAQ is in a world of its own, just pushing up here. Another up day yesterday. Maybe it's going to be an inside day today. With Apple coming out after the close, keep in mind the possibility that today just winds up being a wait and see until after that, and especially after a wide range bar up. It's often a narrow range bar or smaller range day. You can kind of see that happen here. Wider range bar up, narrow range day. Wider range bar, narrow range day. Up, narrow range day. Up, and so we may get the narrow range day, some more choppy type of trading. So it's been a very controlled uptrend. If you can see on the 60-minute chart of up, sideways, a little dip down and back up, and a little pull up there, dip back down, back up again, and just going sideways right here in a tight little range, which looks like from this time frame, hey, buy the breakout. Now, does that work? It could. However, when we look at the daily chart, it doesn't suggest that breakouts are going to be a high odds type of trading pattern here. We're up multiple days in a row. Wide range bar yesterday, far from support, and this 20-period moving average, which suggests, hey, this should get tired, or I thought maybe it could get a little tired yesterday, but it didn't, and it pushed higher. And with the S&Ps not going anywhere, that's unusual, but it's being driven by a small amount of stocks. So here's the Dow, which has been just kind of chopping lower a little bit after hitting resistance. The weeklies are still looking good. One of the things I mentioned yesterday as a guide was bonds, and which way are they going to go here? And obviously they started maybe a little stronger, but then gave it up, and made it easier to look at this on the with TLT, which you can see right here. And I was like looking for, well, if this breaks down, the S&P should break up. They didn't. However, the Qs pushed up in it. So while the S&Ps did not participate, just the knowledge of, the wherewithal of, hey, if bonds are moving down, that's going to, at a minimum, support the market, if not even help drive it higher. Imagine there was probably shorts are not going to be working out too well while you have that underpinning of support coming from TLT moving lower. So, all right, others. We got oil that's still trying to hold this area here. It's real sloppy, so I would avoid this and see which way it might go. You would think it could pop up here, just based on the fact that it came down so hard. It's got the 200 MA here. It is in an area of support, but overall just a wide, whippy kind of trading range, so no real direction there other than very short term. You want to play these little bounces between support and resistance. Internet index here. I mean, just the picture of a chart that is just begging to pull back. It's climactic. Gap up, gap up, gap up. Wide range bar. And we get the inside bar. You can see how the hourly is just a power trend upward. So, this typically if we get the inside day, but typically what you want to wait for is the turn to begin to happen. The turn day historically tends to be a very difficult day to try and fade a trend. You want to see it chop around a little while and then begin to roll over, and you get the bigger part of the move, and don't sit with the chop that you'd be questioning whether it's going to stop or not, and it would seem inevitable that it has to stop, but who's to say it can't go higher, even though it looks like it should come in. So we'll see, but this pattern, one that historically does stop very soon and then begins to have some type of retracement. It's really powerful. It's a breakout, and you can see the consolidation prior to the breakout, but it's a climactic blow-off type of move here that typically results in a corrective pattern that it could be pulling back, or it could go sideways for a period of time and a lot of choppy type of price action. We shall see. Facebook is certainly helping that with its run higher in anticipation of those earnings. So assuming that they're going to be good, maybe Facebook gaps up when they report, and then probably you'll see a lot of profit taking come into it since it's already run up as much as it has. All right, guys, that's it for today. Good trading, and we will talk tomorrow.